welcome back to another episode of The Week That Was, where we bring you the key highlights from the week that just went by. Indian equities outperformed its global peers amid elevated volatility, owing to a spike in US Treasury yields. Going ahead, we expect the index to gradually challenge the upper band of consolidation, placed at 19,800, and subsequently accelerate its upward momentum. Meanwhile, 19,200 would continue to act as a key support. Small cap index, meanwhile, has been showing immense strength by undergoing healthy retracement above its 20-day EMA, highlighting inherent strength. As for crude oil, breakdown from its 3-month rising channel signifies resumption of corrective bias, and we expect it to head towards 80. We are positive on BFSI, consumption, power, and PSU baskets, while IT offers a favorable risk reward. The RBI MPC kept its repo rate unchanged at 6.5% in a unanimous decision for the 4th consecutive meet. No surprises here. A key driver is that the core inflation, which excluded food and fuel, has eased by 140 basis points from peaks in January 2023 and is below RBI's upper tolerance limit of 6%. However, the governor cautioned that the future is still uncertain, with global economic growth softening and that near-term food inflation may still be on the higher side. Meanwhile, private sector capex is gaining ground. Seasonally adjusted capacity utilization for the manufacturing sector continued to trend up, which augurs well for India's investment activity. RBI estimates GDP growth to remain stable at 6.5% in 2024-25, and CPI inflation is expected to average 5.2% in Q1 of 2024-25. RBI has signaled that it will keep liquidity tight using bond sales to bring inflation closer to its 4% target. As per reports, the long-awaited free trade agreement between India and UK is expected to be signed by the end of this month. If this happens, it could be a game changer for the Indian garment companies which export to Europe. The credit card unicorn, Cred, well known for its quirky advertisements, has posted its FY23 financials. While its revenue grew 3 times, its losses have remained static, which is a healthy sign. Furthermore, Cred announced its foray into automotive insurance and servicing via Cred Garage. Slice, another fintech unicorn, will be the first fintech firm to essentially receive a banking license. How? Because RBI has approved its merger with Northeast Small Finance Bank, the merger first of its kind. The merger aims to strengthen financial inclusion in India. Bajaj Finance's juggernaut continues to march on. Its AUM grew by 33% in the second quarter, while deposits grew by 39% year-on-year. Total customer franchise of Bajaj Finance has grown to a whopping 76.56 million as of September 2023 versus 62.91 million year-on-year. That's not all. Bajaj Finance has announced that it will raise fresh capital of up to 10,000 crore rupees, of which 8,800 crores will be via QIP. Its ROE continues to remain above 20%, which is the highest in the industry, and this fundraising will provide a runway for continued growth while sobering the valuation by 10 to 15%. Suzlon Energy gained about 15% in the week after the promoter released pledge on 97.1 crore shares, which is 7.13% equity, on September 28. The stock is up 300% in the last 6 months on the back of improving outlook of wind energy projects, a large order book, and a strengthening balance sheet. Tata Motors' own Jaguar Land Rover has reported strong sales growth in the second quarter of FY24, as wholesale volumes increased by 29% year-on-year and retail sales were up 21% year-on-year. This week's much-awaited hidden gem is Mayur Unicoaters. Mayur Unicoaters is a leading player in the technical textile domain, manufacturing synthetic or artificial leather with applications across automotives like seat upholstery and inner lining, footwear, furnishing, and apparels. With a firm order pipeline, both in domestic as well as export business, we expect sales at the company to grow at a CAGR of 17.5% over FY23 to 25E. With increasing share of high-margin auto export business, operating leverage benefits, and stable raw material pricing, we expect margins to improve conservatively to 20% levels by FY25E. With improving scale of operations, core ROIC is seen to improving to roughly 25% plus levels. With controlled working capital cycle, NUL is offering an attractive CFO yield of around 4%. On the balance sheet front, it has long been a debt-free company with present net cash on books at about 180 crore rupees. That's all for this week's major news. We'll see you as the week that will be concludes, and all we're left with is the week that was.
Investments in security markets are subject to market risks. Read all scheme-related documents carefully.